Now we are joined by the management of NIIT on the back of its earnings. If we look at the earnings on a sequential basis, the revenue is up 8.2%. The EBITDA, they've turned EBITDA positive in this quarter of 6.9 crore. EBITDA is what they've raked in versus an EBITDA loss of 1 crore on a sequential basis and a profit uptake of 12.7% on a year-on-year basis. But let's get on board Vijay K, Thadani, who's the Vice Chairman and Managing Director of NIIT, who is joining us. Hi, good afternoon to you, Mr. Thadani. Thank you so much for joining us today. Mr. Thadani, before we come to the specifics of the numbers, let's discuss the demand outlook. IT is showing some good commentary. How long do you expect it to continue? And on the other hand, what are your views on the BFSI segment as well?
Okay. So I think you're right. 15% YOY growth and 8% quarter-on-quarter is consistent with the momentum that we had. In fact, it's a fourth year of consecutive YOY growth that we have seen in this time, which is a sharp recovery from 4 quarters ago when I think the hiring sentiment was very weak. The second thing which you also said was the hiring sentiment has improved. However, I must point out the hiring sentiment has improved, but its impact on the ground happens with the phase difference, but is yet to be experienced. And I think that's the hope that we have in the coming quarters. And definitely, I think the announcements by big hirers as to their hiring plans, I think would certainly aid towards that. And the technology sector, I think, is on a positive roll as we see in the coming quarters. And I think with the newer technologies and generative AI, cybersecurity, and the whole data engineering focus that is building up, I have a feeling there is a great opportunity for not only training freshers, but also training the current workforce and reskilling the current workforce. On the BFSI front, I think last few years, BFSI has been on a strong recruitment drive. Over the last quarters, I think last quarter, there have been a little bit of tapering off because of which we felt during the end of the quarter. And that may be to do with the timing as well as some of the regulatory actions. But overall, I think the need for a large amount of trained workforce to get retrained or trained for the new technologies, as well as new opportunities, as India is becoming a very, very important player in the global market, the whole vision of Viksit Bharat, I think all these are going to contribute a great deal to putting the Indian workforce or Indian graduates in premium positions in the world skills arena. So that's my overall outlook.
Okay, Mr. Thadani, that sounds good. Your overall outlook looks positive, but give us a sense of what the organic growth is going to look like when you take a look at that on a yearly basis. What's your outlook on the organic front as well?
Yeah. So on the organic front, I think in the first 3 quarters, we have grown 18%. And whenever we discuss, we are normally discussing organic growth only because the inorganic, whenever it happens, has its own impact, and that is separately stated. So whatever I'm referring to is organic growth. And I think for the first 3 quarters, we have had an 18% year-on-year. We see this momentum to accelerate in the coming quarter. There are a number of dynamics at play. Like I said, the hiring sentiment has improved, but its impact on the ground is being felt. And I'm sure this and the next 2-3 quarters will show us that. This is also the last quarter of the financial year. So typically, seasonally a weak quarter because a lot of organizations make sure that they conserve their resources to complete the year end. So I think all those impacts will feel. So we will see good year-on-year growth in the coming quarter as well.
Right. Mr. Thadani, talk to us about the margins as well. Your margins have improved. As I can see, you've turned EBITDA positive versus an EBITDA loss, on a sequential basis. What led to that growth and what is the sustainable growth rate going forward?
Yeah. So, NIIT is at this point of time, and it's in the current avatar, is in an investment cycle. As you know, we transitioned and we went through a demerger process. So we are in an investment cycle where we are putting investments at specific places to to get the organization ready for growth in the coming years. By that logic, this EBITDA growth, this EBITDA is by no indication a measure of the steady state. In steady state, the EBITDA margin that we look for is 15 to 20%. But this investment cycle will continue, and therefore from quarter to quarter you may see variations. But overall, I think you can see an improvement. And wherever the intensity of investment increases in a couple of quarters, there may be dips in margin. So I think we have to look at the overall story of investment versus growth as well as the margin. We are obviously very particular that everything that we do has to be of sustainable growth, sustainable, profitable growth. But there will be temporary times when margins may be sluggish. So like last year, for example, you said we came from negative to positive. One, of course, is how we have managed our cost and various other elements, or how the recovery has taken place. And the other is also the element of the investment cycle that we are in.
Okay, Mr. Thadani, thank you so much for joining us. On that note, we'll let you go. Thanks once again for speaking to us at ET Now. But